Imagine waking up tomorrow to find an extra $5,000 in your bank account, not from a lottery ticket, not from an inheritance, but simply because you knew exactly which piece of paper to file with your county government. Now, imagine waking up to find $5,000 missing because you didn't. This is the reality for millions of American retirees right now. Major property tax changes are sweeping across the country, and most people have absolutely no idea they are happening. Some of these changes are life rafts designed to save you thousands of dollars. Others are financial torpedoes that could sink your retirement budget if you aren't paying attention. New exemptions are taking effect this month. Critical deadlines are approaching in weeks, not months. States are making aggressive legislative moves that haven't happened in decades, and if you are on a fixed income, these changes aren't just bureaucratic noise. They could be the difference between staying in the home you love and being taxed out of it. I am not exaggerating. Retirees across America are either saving thousands because they knew the code or losing thousands because they didn't. Welcome back to Tax Hack Pro. Today, I am breaking down the property tax changes every single retiree must know about right now. We are going to cover what is happening, exactly where it is happening, and precisely what you need to do before the clock runs out. This is information you cannot afford to miss. Some of these deadlines are weeks away. Some of these changes have already taken effect, and you might be missing out on money that is rightfully yours right now. Let's get into it. Starting with the biggest property tax change in modern American history. Breaking story number 1, Texas. Everything is bigger in Texas, and that includes the tax cuts. In November 2023, Texas voters overwhelmingly approved Proposition 4. This constitutional amendment raised the Homestead Exemption from $40,000 all the way up to $100,000. Let that sink in. That is the largest homestead exemption in American history. No other state comes close to wiping that much value off the books just for living in your home. And here is the breaking news that matters to you today. It is now in effect. This isn't a campaign promise coming soon. It is not pending legislative approval. It is the law of the land right now. Millions of Texas homeowners are already seeing the benefit. The question is, are you one of them? Here is the urgent part, and this is why I am calling it breaking news. Data shows that hundreds of thousands of eligible Texas homeowners still haven't applied. They qualify for this historic exemption. They are entitled to it. But they haven't filed the paperwork. And every month that passes where you pay taxes on that full value, you are essentially setting money on fire. If you are 65 or older in Texas, the news gets even better. You get the $100,000 base exemption. Plus, you get an additional $10,000 for being over 65. That is $110,000 of value that the tax man cannot touch. And on top of that, your school taxes freeze permanently at whatever dollar amount they were when you turned 65. We call this triple protection: base exemption, senior exemption, school tax freeze. It is the most powerful shield against inflation in the country, but it only works if you apply. It is not automatic. The government does not come knocking on your door to hand you money. So, what do you need to do if you are in Texas? First, check your status. Go to your county appraisal district website right now. Search your address. Does it show HS for homestead and A65 for over-65? Many people think they have applied but haven't. Maybe you moved and forgot to refile. Maybe the paperwork got lost. Verify it. If you are 65 or older, you need to file a separate over-65 exemption application. The school tax freeze kicks in once that specific exemption is approved. The deadline is typically April 30th. Do not wait until April 29th. Contact your county appraisal district and apply today. Every month you delay is money you are not getting back. That is breaking story number 1. Texas's historic $100,000 exemption is live, but you have to claim it. But Texas isn't the only state shaking things up. The next breaking story comes from the Heartland, where a state is now refunding up to 100% of property taxes to qualifying seniors. Breaking story number 2, Nebraska. Nebraska just made a major move that most retirees don't know about. Through a piece of legislation called LB 243, Nebraska radically expanded its property tax refund program in 2024. They raised the income limits, meaning more seniors now qualify than ever before. If you checked 5 years ago and were told you made too much money, check again. The rules have changed. They also increased the refund amounts. We are seeing bigger checks hitting mailboxes. For qualifying low-income seniors, the refund can be up to 100% of property taxes paid. You heard that correctly. You pay your property taxes, you file a form, and Nebraska sends you every single penny back. It effectively eliminates the tax burden for the most vulnerable retirees. If breaking property tax news matters to your retirement security, hit that subscribe button right now. At Tax Hack Pro, we track these changes as they happen because in this economic environment, they are happening fast. Here is how the Nebraska program works. You pay your property taxes like normal. Then you file Form PTR, Property Tax Relief, with the Nebraska Department of Revenue. The state reviews your income and eligibility. And then Nebraska sends you a refund check. Low-income seniors can get up to 100% back, but even moderate-income seniors are getting significant partial refunds. Average refunds run between $1,500 and $3,500. We have seen some seniors getting $3,000 to $4,000 back. That is real money. That is a vacation. That is new tires for the car. That is peace of mind. But here is the critical part. You must file Form PTR every single year. It is not a one-time application. It is not set it and forget it. If you miss the deadline, you do not get a refund. You wait 12 months and try again. You lose that year's money forever. What do you need to do if you are in Nebraska? Go to the Nebraska Department of Revenue website and download Form PTR. Gather your income documentation. File before the deadline, which is typically in the late summer or fall, and do not assume you don't qualify. With the expanded income limits, the net has been cast much wider. Check, file, get your money back. So we have Texas with exemptions and Nebraska with refunds. But the third breaking story affects retirees in almost every state, and honestly, it is not good news. Breaking story number 3, the assessment crisis. Between 2020 and 2023, home values across America surged like we have never seen before. We saw 30% increases in some areas, 40%. In hot markets like Florida or Idaho, 50% or more. Your home's value may have jumped by $100,000 in just 2 or 3 years. That sounds great on paper. You feel richer. But here is what most people don't understand about the mechanics of taxation. Property tax assessments lag behind market values. They don't update instantly. It takes 1, 2, sometimes 3 years for the county assessors to catch up to the market reality. And that lag, it is over. Right now in 2025 and 2026, those pandemic-era value increases are finally hitting property tax bills. The delay is gone. The shock bills are arriving. Where is it hitting hardest? New Jersey, which already has the highest property taxes in America, is seeing 20 to 30% increases on top of already crushing bills. Cook County, Illinois uses a triennial system, meaning they assess every 3 years. When those assessments update, homeowners are seeing 30 to 50% jumps overnight because the last time they were assessed was before the peak. Connecticut just completed 5-year revaluations using peak pandemic values. Florida's surging values are now flowing through to tax bills. Even California, where Proposition 13 protects long-term owners, is hitting new buyers with assessments based on sky-high purchase prices. The reality is brutal. A retiree who budgeted $3,000 a year for property taxes is opening a bill for $4,500. That is $1,500 they didn't plan for. That is $125 a month on a fixed income with no way to absorb it. Some retirees are facing an impossible choice. Find the money somewhere, cut back on food, cut back on medicine, or sell the home they have lived in for decades. They are feeling trapped in their own homes by taxes they can't afford. But here is the breaking news within the breaking news. You do not have to accept that assessment. You can fight back. Most homeowners don't know this, but you have the legal right to appeal your property tax assessment. And in many cases, you can win. The county assessors are using mass appraisal techniques. They are using algorithms. They make mistakes. Here is how you fight back against the assessment crisis. Step 1, check your assessment notice carefully. Do not just look at the bottom line number and get angry. Look at the details. Step 2, look for errors. Is the square footage correct? Does it say you have a finished basement when you actually have a concrete slab? Does it list a bathroom that doesn't exist? Is the lot size accurate? Is the condition of the home overstated? Does it say excellent when your roof is 20 years old? These errors happen all the time, and every single one of them is grounds for an appeal. Step 3, compare your assessment to similar homes that recently sold. Go on Zillow or Redfin. If comparable houses in your neighborhood sold for less than your assessed value, that is evidence. Print it out. Step 4, file an appeal if the numbers don't match reality. But here is the critical deadline alert. You typically have only 30 to 90 days from when you receive your assessment notice to file an appeal. That is a tiny window. If you miss that window, you're stuck with that inflated assessment for the entire tax cycle. No extensions. No exceptions. The assessment crisis is real. Values that spiked during the pandemic are now hitting tax bills. Shock increases of 20, 30, 40% are common, but you can challenge that number. Do not just pay it blindly. Fight for your money. While some retirees are fighting higher bills, others are discovering new protections they didn't know existed. The next breaking story is about freeze programs spreading to new states. Breaking story number 4, the freeze expansion. This is good news spreading across America. Freeze programs are multiplying. States are adding new programs. Existing programs are being expanded. Why is this happening? Competitive pressure. States want retirees. Retirees bring stable income. They buy homes. They support local businesses. They contribute to communities without straining the school system because they don't have school-age children. States realize that if they tax retirees to death, those retirees will move to tax-friendly states like Florida or Tennessee. So when one state creates a powerful freeze program, neighboring states feel the pressure to match it or lose their residents. The result is more freeze programs than ever before. And if you haven't checked what your state offers lately, the rules may have changed in your favor. Here is what a freeze does for you. When you hit a certain age, usually 65, your assessed value locks in place. The market can surge 20%, it can surge 50%. Your assessed value stays frozen. Your tax base stays the same. Not just for 1 year, for life. And the earlier you freeze, the more you save over time. Look at the states with strong programs right now. Texas has the school tax freeze at 65 now, combined with the $100,000 exemption. That is the most powerful combination in America. South Carolina has an assessment freeze plus a $50,000 exemption, double protection. Georgia has freeze programs that vary by county, with many counties freezing values at 65. Illinois has the senior freeze program, though you must reapply every single year. Florida has Save Our Homes, which caps increases at 3% annually, powerful for long-term owners. But here is the breaking news part. The landscape is shifting. Multiple states are debating expansion right now. Some are adding freeze programs at earlier ages. Others are increasing exemption amounts. The competitive pressure between states is driving rapid change. What wasn't available in your state a year ago may be available now. You cannot rely on old information. Rules change, programs expand, new protections get added. If you haven't checked your state's current offerings recently, do it now. Call your county assessor. Ask specifically about freeze programs for seniors. Ask if any programs have changed recently. And if you are eligible, apply before the deadline. Freeze programs are spreading. If you haven't checked your state's rules recently, you might be missing new protections. Texas, South Carolina, Georgia, Illinois, Florida, each with freeze programs, each with different rules, all expanding or being discussed. But one state is going further than any freeze. The next breaking story is about total elimination. Breaking story number 5, North Dakota. North Dakota isn't freezing property taxes. They aren't exempting them. They are eliminating them completely. Through House Bill 1158 and related legislation, North Dakota has passed laws to eliminate property taxes on primary residences. This isn't a proposal sitting in committee. This isn't a campaign promise. The legislation has passed. Implementation is underway right now. North Dakota is doing what every other state on this list is just talking about, actually making property taxes disappear. Here is how they are doing it. North Dakota has significant oil and gas revenue. They have a budget surplus. Instead of spending that money elsewhere, they are using it to replace the property tax revenue that local schools and counties would lose. Schools still get funded, counties still operate, all services keep running, but homeowners pay nothing. The average North Dakota property tax runs $2,500 to $3,500 a year. With elimination, that becomes zero. Over a 20-year retirement, that is $50,000 to $70,000 saved. And here is what is different from every other state. There are no applications to file, no forms to submit, no deadlines to meet. Zero becomes the default. You don't have to do anything. Property tax on your primary residence simply doesn't exist. North Dakota's property tax elimination is actually underway. Legislation passed. Implementation happening. If they succeed, other states will have a blueprint to follow. But all of these breaking stories, Texas exemptions, Nebraska refunds, assessment appeals, freeze programs, North Dakota elimination, all of them have one thing in common. Deadlines miss the deadline and you wait another year. The critical deadline alert is coming up. Deadline alert. I need you to understand something. Deadlines don't care about your excuse. Miss a property tax deadline by 1 day, one single day, and you wait 12 months to try again. No extensions, no exceptions. No, I didn't know. Here are the critical deadlines you need to calendar right now. Exemption applications, Texas Homestead and over-65 exemptions, April 30th. Florida Homestead Exemption, March 1st. Georgia varies by county, but many have March or April deadlines. California varies by county. Whatever state you are in, research your specific deadline now, not next week. Now, assessment appeals. You typically have 30 to 90 days from when you receive your notice. Do not wait until the last week. Gathering evidence takes time. Miss that window, and you accept the assessment for the entire cycle. Refunding credit programs. Nebraska's Form PTR deadline is typically late summer or fall. Circuit breaker programs vary by state. Many require annual filing. Miss the deadline, no refund that year. And the one that catches people every time, annual renewal requirements. Some exemptions are one-time applications. File once and you are done, but others require annual renewal. Illinois senior freeze must be renewed every single year. If you assume you are still enrolled and you aren't, you lose the protection without even knowing it until the bill arrives. Do not assume, verify. So April deadlines in Texas and Florida, March deadlines in some Georgia counties. Assessment appeals 30 to 90 days from your notice. Nebraska refunds late summer, annual renewals. Verify you are still enrolled. Miss any of these and you wait another year or worse. Lose protection you thought you had. Knowing isn't enough. You need to act. Information without action is worthless. These opportunities and protections require you to do something. Nobody is going to do it for you. So here is the action bulletin. Exactly what you need to do this week, this month, and this quarter to make sure you are not leaving money on the table. This week, immediate actions. Number 1, check your exemption status. Are you actually enrolled in every program you qualify for? Call your county assessor and verify. Many people think they are enrolled but aren't. They never completed the application, or it was rejected, or they moved and didn't refile. Verify it. Number 2, review your latest assessment notice. Pull it out of the drawer. Look at the details. Does the square footage match your home? Are the features accurate? Do they list things you don't have? Is the lot size correct? Every error is an opportunity to appeal and lower your bill. Number 3, calendar all your deadlines. Exemption application deadlines, appeal windows. Refund filing dates, annual renewal dates. Put them in your phone, put them on your wall calendar. Set reminders for 2 weeks before each deadline, not the day of. This month, priority actions. Number 4, research your state's current programs. Rules change frequently. New programs get added. Exemption amounts increase. What you read 2 years ago may be outdated. Go to your state's tax department website or call your county assessor and ask what is available now. Number 5, gather all required documentation. Proof of age, proof of residence. Income documentation if your programs require it. Property records. Have everything ready so you are not scrambling at the deadline. Number 6, file any pending applications. If you have been putting off applying for an exemption or filing for a refund, do it this month. Don't wait until the deadline. Apply at least 2 weeks early and confirm they received your application this quarter. Set up actions for the long term. Number 7, create a dedicated property tax file. Organize all your documents in one place. List all deadlines. Save contact numbers. Gather evidence for potential appeals. When you need something, you know exactly where it is. Number 8, evaluate your overall situation. Are you in the best state for your property tax situation? Could a move to Texas, South Carolina, Alabama, or another tax-friendly state save you thousands over your retirement? What does your 5-year property tax outlook look like if you stay? These are decisions that deserve informed analysis, not guesswork. The bottom line, 5 breaking property tax stories every retiree must know. Texas's historic $100,000 exemption is now in effect. Apply if you haven't. Nebraska's refund program just expanded. File Form PTR. The assessment crisis is hitting right now. Check your notice and appeal if needed. Freeze programs are spreading across America. Check your state's latest rules. And North Dakota's elimination is actually underway. The future may be zero. Deadlines are approaching. Action is required. Do not wait. Hit subscribe to Tax Hack Pro. We break property tax news as it happens so you never miss critical changes affecting your retirement. Comment below which of these breaking stories affects you most. Are you in Texas, Nebraska, a state with freeze programs? Have you been hit by the assessment crisis? Let me know. I read every comment. And share this video with a retiree who needs this information, a friend who might be missing out on thousands in savings, a family member who doesn't know about these programs, a neighbor about to be hit with a shock bill. Breaking news for retirees. Now you know. Act now because deadlines don't wait. I'm the Tax Hack Pro. Protect your home. Protect your retirement. I'll see you in the next one.